Welcome, everyone, and thanks for joining today. We're talking about data in wealth management, which for a long time wasn't a priority for most firms. I think that's changed. It's gone from a back office concern to something boards now pay attention to. In this webinar, we'll look at why, what usually gets in the way, and what firms are doing about it. So, quick introduction. I'm Priya, I run Raw Knowledge. We came from the investment tax world, and today we provide the tax and reporting data behind a number of UK and global wealth and fund managers. So these are challenges that we actually deal with ourselves. I'm joined by two people who know this industry well. That's Mark Kearns, CEO of Adapter Advisory, and Ian Woodhouse, who's at Maltese Investor Services and has spent over 25 years advising wealth managers on strategy. What I'll do is walk you through what the research and our own experience tells us and bring Mark and Ian in as we go along. So everything we'll cover today comes from this. That's Order from Disorder, which we produce with the Wealth Mosaic. We'll pop a link in the chat. So if you want to read the full report, you can. And it's based on conversations this year with COOs, CTOs and CDOs at mid-tier UK wealth firms. So Mark, before we get into it, does what's in here match what you're seeing day to day?
Yes, no, absolutely. I think it's the research is excellent. I think what we're seeing from a data perspective is that all organizations are focused on data in one form or another, but they're at different stages of the journey. And with the advent of AI, large language models, etc., it's really exaggerated the focus on getting data right. And many of the outputs from the research really confirm that prayer.
Okay. Thanks, Mark. Okay, so why now? A few things have come together at once, and that's data's more complex, clients expect more, and regulators want more evidence and detail. I think the technology's also moved on, without doubt. So there's AI in particular, which has exposed weaknesses, because as we know, if the data feeding it isn't clean, the output won't be either. And this isn't just a wealth problem. Atlan found 87% of organizations are dealing with disconnected data that creates real risk around quality and compliance. So overall, the pressure is coming from a few directions at once. So Ian, we're saying data is now top of board agenda. From a board and strategy view, is that real or still talked about more than it's funded?
Yeah, I would say, it's real. First of all, some context. I mean, I support the board and the executive committee at Maltese Investor Services. We are a regulated B2B custody investment servicing performance tax. We do offer a configurable white labeled outsourced managed service for complex DFMs and family offices. So what we are seeing is that data has been an operational problem for years. It reflects data hidden in siloed functions. I think we're all well aware of many spreadsheets, often inconsistent definitions, as there's lots of rekeying and manual interventions to get to a single source of truth. It's costly and difficult to scale. So why is it now important for the board agenda? Well, I think there's a number of reasons. Clients' expectations around reporting have increased. There's a rapid innovation in new asset classes, increased need to evidence risk and compliance obligations. Think about SMCR, CAS, client money, consumer duty, and you've got M&A consolidating the industry. So scalable operational growth is quite key. And most of all, I think that as was mentioned, there's kind of the need for a strong data foundation, because to be successful in the business going forward, you need to move from these silos to a more front to back aligned data. We're at the early stages of these data-driven operating models, and it's about moving forward, I think, with confidence, with flexibility and option, and you want optionality at the board level. And boards will place more attention on this area in order to move successfully to the future. Back to you, Brian.
Thanks, Ian. That's something we're hearing in the market as well. So that matches what you're saying. Okay, so if the case is so clear, why hasn't everyone fixed it? I think there's a few reasons for that. So you've got the legacy systems that were never built to talk to each other. You've got the effort and cleaning of joining up all that data. You've got the manual processes which are built into the workflow, and then the governance that differs from one team to the next. And I think then perhaps the main one, that we're finding is getting the whole business to buy in. So for years, data wasn't a priority, and what's changed is that firms can't keep putting it off any longer. So moving on to the research, which points to three key themes. The first one we've got is fragmentation, because firms are likely to pull data from dozens of providers and systems, each one in its own format. And as Ian, as you mentioned, on top of that, there are internal silos where different teams all have their own ways of working. There was one COO that told us that they deal with around 50 different providers. So teams are reconciling all this data manually, and it's really very time consuming. I think the one that comes up the most in our conversations with clients and prospects is pricing. So you've got a main vendor, a backup, custodian prices, administrator prices, and they rarely agree. What we found works is to decide up front, so which source you trust most, fall back to the next when one price is missing, and end up with that single price. So in practice, there'll be much less confusion on which number to use. I think another use case we've come across is financial identifiers and classifications that don't line up across systems. So what you need to do is hold to that one agreed version, and I'd say a good number of those reconciliation problems should disappear. So Mark, everyone wants that single source of truth, but nobody's fully there. Where do firms often get stuck?
Look, I think there's a variety of things, Priya. I think the principle of validating data using multiple sources it's tried and tested. It's been used in the industry for some time. But obviously, the issue has become the increasing complexity. Ian referenced before that we've obviously got a diversity of investment instruments. We've got a complexity around, let's say, traditional assets versus private markets, crypto assets, and so forth. So everything has become more complex. So I think one of the issues in terms of single source of truth is actually having a very structured plan on what are you trying to deal with, what are your priority use cases, plus also resourcing those use cases with individuals that truly understand the underlying data. I mean, this is a complex area, and you need experts, subject matter experts, to be able to focus on the underlying data streams to be able to get this right. So I think one of the challenges is that you almost need a landing spot. So solving for a single source of truth, it's identifying use case number one, solving it. Identifying use case number two, solving it. And gradually building up over time. And on that basis, you have a program of work, let's say, over a period that would be relevant for each organization, rather than trying to do too much too quickly, but not actually getting over each use case so that you're bringing operating efficiency on a staged basis. But this is about planning, it's about expertise, and it's about real focus. The technology is available, but obviously you need people that understand that, and you can never get away from people understanding the underlying data and what you're trying to solve for.
Thanks, Mark. So the second theme that we discovered was the format. So every new platform or vendor brings its own structure. And I think the structured data is fairly reliable. It's the unstructured data that tends to cause the problem. So you've got the PDFs, the emails, and the client conversations. And this is where we started. So getting the data out of those documents is hard work. So for example, documents for corporate actions and from fund managers, and each one is laid out differently. I think our hardest use case is tax data, and that's for excess reportable income. So here you've got the same number named differently with the key dates written into sentences rather than neat fields. 50 plus share classes per document and hundreds of pages. Today, we've got 87% of those automated end to end across more than 1,000 fund managers with 100% field level accuracy. One of the benefits that we've seen with this is speed. So we can now deliver data sets to clients faster. We've got turnaround time down from around 7.5 hours to 30 minutes. I'd say unstructured data is the part firms tend to underestimate. So Mark, back to you again. That really messy unstructured data, do you think firms can realistically deal with it in-house, or is it where they should get outside help?
It's an interesting question, Priya. Look, I think intellectually and practically, obviously firms can solve these things for themselves. But the reality is that maybe with a large scale firm that's got appropriate funding, appropriate resourcing, they can solve this themselves, maybe with the use of appropriate technology partners. I think the challenge becomes for those mid-size and smaller firms who don't have that budget, they don't have that depth of expertise, but at the same time, they're dealing with the same problems. As I referenced before, and you commented on, if you take private markets, which has obviously been on an accelerated growth path, there's a tremendous amount of unstructured data that supports that. So dealing with that alongside of other operating issues, the challenge is having funding and having resourcing and being able to prioritize this. So in answer to your question, I think it depends on the organization, but certainly for firms that don't have that in-house capability or don't have appropriate funding and they're juggling multiple priorities, turning to a third party makes logical sense, particularly where that third party can truly partner with them, help them plan their data strategy, help them define individual use cases, and execute solutions for those use cases. So as I said before, they're actually dealing with the data management issue on a stage basis, but leveraging the expertise of a partner who can provide both the consulting, but also the technology expertise that goes with it. So it's an element of horses for courses, and each organization needs to make their own decisions. But certainly third-party support, if you're truly going to crack this as an agenda item, is going to be critical for some organizations, Priya.
Thanks, Mark. That's a useful response. And Ian, what about yourself? Build it yourself or not?
Well, I think that if you look at things, we're at an early stage in this transition towards cloud and AI. So what you've got is technology and operational domain experience blending. So we're in this early stages of moving to a modern data-driven operating model, I would say. So where we're at an early stage with this. People are just sort of moving now from experimentation to initial implementation. And, not everybody is moving at the same pace. I think also the interesting thing is some firms are investing in operational technology improvements at a record level, but the reality is that few have yet seen the sort of promised performance gains from this new front-to-back data modernization and scalability. And it's quite hard, I think, to move from silos to front to back. And I think the examples that you gave, Priya, are quite good. You can move from hours to minutes once you get this sort of front to back approach. The other thing is that skills and capabilities are new. Some of these are quite new capability, and the pace of change is perhaps rising or getting faster. And so it may be harder and riskier to seek to do everything in-house. So what we tend to do is we look at an expanding range of potential ecosystem partners that can help. Now, these can be a wider range than previously. So you would have traditional domain application vendors, for example. You've got cloud vendors, a bit more modern. You've got some very racy fintechs out there. And you've also got outsourcers like ourselves and specialized data consultants. So all of these partners can help move you along. And I would say I think it's moving to more of an ecosystem approach to moving forward. And I think what firms need to think about is an optimal mix of build themselves versus buy versus outsource, and choosing ecosystem partners depending on the firm's particular goals, their timeframes, and the capabilities they're looking for to deliver the outcomes they seek. And I think the real challenge is to find that optimal set or mix of partners. So I would say future profitability depends on data-driven fundamental change to the operating model and the outcomes. And you get there by working both with in-house and the right mix of external ecosystem providers to get the outcomes you really want. So back to you, Priya.
Thanks, Ian. So the third theme is manual effort, because a lot of the data is still done by hand, which makes it hard to scale, takes up time, and introduces errors. And this is where our platform comes in. So once we've extracted the data, it validates each source automatically, so very little needs human input. I'll show you exactly how on the next slide. But what that's meant for us is that the time spent on manual processing is down by about half and still falling. And those people are now working on new business and client experience rather than spreadsheets. So Ian, back to you. A lot of firms are moving into AI before their data is really ready. How concerned should they be about that gap?
Well, I think it is an area of concern because, as you mentioned and Mark has mentioned, not only are we dealing with traditional data, but we're dealing with new data, and we're dealing both with structured and we're dealing with unstructured. So that means data readiness is a real challenge. And I think it's also important to think about where you start. And I always think it should start with what data do you actually need for what purpose? And then you can start to validate what that data focus is in terms of where the data actually sits, who owns it, to what degree is there a need to refine the common data definitions as you mentioned, and also the standardization of data, so that then you can develop a forward-looking data foundation layer around which you can interconnect with a range of internal and external providers. And I think this is quite a good way to go because it allows you to move forward without changing your underlying internal systems. So that I think this data layer, and also it allows you to keep external ecosystem partners. So I think that's probably the best way to resolve this challenge and turn it into an opportunity. So back to you, Priya.
Ian, we're also hearing, a lot from our prospects and clients around, initially looking at the workflows, the data workflows you have internally before you actually start, sorting out the data foundations. So that's an interesting point that you've made, and we've heard the same. So Mark, what are you seeing?
Look, I think it's a subject I feel quite passionate about, as you know well, Priya. Obviously, the utilization of AI, it's topical. Everybody's focused on how can they utilize AI, and in all of its forms within their business operations. However, when you look at the underlying data within an organization, we've got organizations, some instances they're doing a lot of fundamental work, leveraging, for example, Excel spreadsheets. So you've got that at one end of the spectrum, and at the other, you've got organizations that have got larger budgets and resourcing, they're investing heavily in AI technology and trying to implement the latest technology into their operation. So I think that the key here is that AI in and of itself is, of course, brilliant. However, the utilization of AI is heavily compromised if the underlying data is not accurate and it's not dealt with in an appropriate way. So I kind of almost address it in reverse. I think the key thing here is to have a clear data strategy, to have a plan associated with that strategy, and as I mentioned before, to look at use cases on a case-by-case basis and leverage AI strategically in that context. But the fundamental underlying data needs to be accurate to get the true benefits of AI. One of the advantages of AI is that it's accelerated the focus on getting the underlying data right. So that in and of itself is very positive. But the reality is that organizations that we deal with are in very different stages of this journey. So it's true that there's often pressure to leverage AI tools, but that needs to be mapped with, okay, how does that fit with our overall data strategy? So there's and a supplement to that, just referring to Ian's comments. You know, I think there's huge potential here to leverage the latest technology, but ideally it should be used in the context of the plan I've referenced, but it should be a supplement to the existing ecosystem. So the key here is leverage this in a structured, planned way, and obviously map it to the nature of your underlying business and the nature of the underlying instruments you have. What needs to be remembered here is that what are we trying to do? What are we trying to do in terms of managing data better, leveraging AI? We're trying to improve turnaround times for client reporting. There's a significant regulatory demand on organizations for timeliness and complexity of reporting. There's a variety of instrument types that wealth managers and others are covering. And ultimately, there's a need for improved efficiency and improved profitability. So the benefits of doing this right are significant. So consequently, anything where the benefits are significant needs the right fundamental planning and approach. And that is, it doesn't matter what the size of organization is, those principles hold true for all firms.
Thanks, Mark. Right, so here's a snapshot of how our platform handles manual workflows. So the data moves through a few stages. It starts as raw data, exactly as it arrives from each source and completely untouched. So there's always an original to refer to. What you're looking at here is the next step, where each source is standardized and checked on its own. So is it complete? Is it in the right format? Does it look sensible against the last time that source came in? And I think what's worth noticing is how much of this happens automatically. So on this batch, the platform made over 2,000 corrections on its own, and only 12 needed manual intervention. So there are two kinds of exception here. There's the non-critical ones that get flagged against the data, and no one needs to look at those. The platform just handles them. And the critical ones are quarantined, and those are the ones a person actually looks at. And when someone reviews a quarantine record, we've got various options. So you can escalate it back to the provider. There's review or amend the validation rules, add or amend an auto correction, add a user correction, or decide that no action is needed. So most of it is handled automatically, and only the genuine exceptions need a person. And I think one point that's worth noting is that at this stage, we're not comparing the sources against each other. That comes next. That's in a later step where all the different sources are brought together, compared and blended into one agreed view. And that's your single source of truth, which your reporting advice and client systems all use. Okay, so how do firms move from disorder to order? And there are a few principles, but I think the main one is that you don't have to rip everything out. I think the mistake people make is assuming they have to replace all their core systems, the CRM, the portfolio and custody tools, and they don't. Those can stay. And I think Ian touched on this as well. The real work sits alongside them. That's a properly governed, unified data solution that extracts everything, cleans it, validates it, integrates it, and produces that one golden source held in a data warehouse with full lineage so you can track the journey of your data. And I think it's worth making the distinction that this isn't actually a superficial layer that's sitting on top of your data you've already sorted. It's the foundation that does the hard work of getting the data right in the first place. And I think the advice, and I think Mark, you touched on this, is to start with the use cases where the pain is highest. So that's often product or market data. Prove it there, then build out from there. I think two things definitely run through all of this. And the first is to bring people with you, because this only works if the whole business buys in and it's not just about IT. And second, measure the value. I think if you get those foundations right, everything else falls into place, such as the client experience stays consistent and AI is working with clean, trusted data. And last one for you both. So Mark, first, 5 years out, what separates the firms that have mastered their data from the ones that haven't?
I think certainly the points that you've gone through are critical. I think the thing that is important and what's changed is that it's very clear that data management is at the center of most organizations' priorities. So with that as a foundation prayer, over the next 5 years, I think there's this increased recognition that for the reasons I mentioned before, everything is required quicker, whether it's for clients, whether it's for regulators, whether it's for internal consumption. So in that 5-year time frame, I would expect firms will be far more advanced in terms of leveraging these tools to improve the turnaround of reporting. That's number one. I think, secondly, from a complexity point of view, it's ironic, but as time goes on, things are getting more complex rather than simpler. So over that 5-year period, utilizing these types of tools as part of the ecosystem, I think we'll find that managing data and assimilating data and being able to deal with it largely on an automated basis will continue to improve. The impact of that over that 5-year period will be that clients can assume more changes because they've built an infrastructure that can manage data quickly, accurately, and affect that turnaround. And I think that ultimately means that you've got improved internal clients, enhanced internal client relationships. Critically, that your relationships with third party has improved significantly. And from a profitability perspective, for all stakeholders, whether it's shareholders, whether it's the executives within the firm, whether it's people working within the firm, the level of operating efficiency that will be gained through utilization of these approaches is going to be significantly enhanced. And as Ian commented in one of his early responses, ultimately, obviously, all of these tools need to be used to enhance the quality and performance of the business itself. And I think what we've benefited from in recent times in particular is that people know that data is critical, but it's never necessarily been a top agenda item. Because if you take a wealth manager, for example, There's been increased pressure on revenues, increased pressure on cost base, ever increasing complexity of demands, changing operating models, and so on. So all of those pressures have meant that there's always a long list of items that need to be addressed, that need to be funded, that need to be resourced. So data has never necessarily been one of the top 3 to 5 items that needs to be addressed. But I think there's a recognition now at the C-level of organizations that we have to get this right. The foundations need to be right. If the foundations are right, it gives us much more latitude on how we're building the rest of the business. So if I summarize all of that, I think in 5 years' time, we'll see that firms are operating more efficiently. It has had an impact on profitability, client satisfaction. But those investments need to be continuous over that 5-year time. And it talks to the 5 points here. There needs to be this strategy. It needs to work around the current ecosystem. It needs to be governed. Use cases need to be prioritized. And it needs to be part of the DNA of the organization. And I think all of those things I'd expect to change over the course of this next 5 years for the better for all parties and all stakeholders.
Ian?
Well, I think the first thing I would say is, for leadership and for board. So I kind of look at it at the strategic level, if you will. It's a much more challenging environment, and what you have to realize, I suppose, is that we've come from a situation where we've had siloed, fragmented, functional data, and as was mentioned by both Mark and Prey, a lot of that data is sitting in spreadsheets or whatever. So it's a sudden change, and really what's driven it is the speed of the new technology. So here I'm talking about AI. I mean, the speed of, as we all know, the speed of evolution is quite fast. So you talk about 5 years, it may be a shorter transition, maybe 2 years or so. But I think what this means is leadership has to, at the board and the exco level, they have to take ownership, and they have to think about speedy but good decision making around rethinking what a data-driven, front-to-back aligned operational model looks like. Enabled by better data and AI, and this needs to kind of work on a number of levels. Clearly, it's the use cases and the workflows are important, and I mean I very much agree with what Mark previously said. You don't try and do everything all at once, but what you do is you focus on the use cases that are most relevant. I think what we're seeing is the use cases that are most relevant come from different areas. As I mentioned earlier, I mean, there's a regulatory one, and so I think there are use cases that tend to get prioritized around delivering better or good client outcomes, to reflect consumer duty, for example. I think a second area is kind of improved operational efficiency, and that goes back to Prayer's point. I mean, think about the amount of time that's kind of wasted on poor data organization and management, and so the second area is probably operational efficiency use cases, and I think the third area is probably around innovation. The new technology allows us to do things that perhaps we couldn't do in the past. And this, I think, comes back to a point that Prayer made, which is, that actually roles will actually change with this new technology and with the changing regulations and the product innovation. And so, that's the challenge in moving forward, is we have to prioritize where we place the emphasis on the use of data. And I think also what's also important, given the new technology, is and we're in the early stages of this. There's a whole area around responsibility and governance, and the change in talent that is required, and the governance that enables you to meet the requirements of a regulated entity, as many of the wealth firms and certainly ourselves as outsourcers and managed service providers are regulated. So I think that's the first area, is to kind of think about where you prioritize the data, and it's going to be both commercial and regulatory, and there's going to be efficiency and so on and so forth. So you need to have a focus, which I think Mark has pointed out, in terms of having a clear data strategy on what you will and won't focus on, and where you will go in stages, because you can't do everything at once. Secondly, I think it's about building internal capability, and what we're looking for here is the changing ways of working with smarter workflows to get greater productivity, and that's probably the second big area, is this kind of building internal capability and productivity benefits, and I think probably the next area is leveraging innovation, and I think leveraging the innovation comes through something I mentioned earlier, which is working through a variety of partners. I think maybe gone are the days where you can try and do everything yourself in-house. I think even the bigger players that we know are kind of working through data and technical ecosystem partners, because as Mark mentioned, I mean, what you have to have is a range of skills. You have to have deep domain knowledge, particularly around the investment management area, which is getting more complex, as we've mentioned. But you also have to have now increasingly specialized data skills around that, and technology. And then I think the last area is you've got to keep ahead of the changes in terms of taking place with AI and agentic technology as it moves quite fast, and be prepared to adapt and be more flexible going forward. So I think these would be the things that I would look for in a firm that is in the forefront, say 2 to 5 years from now. Back to you, Brian.
Oh, thanks both. That's great perspectives on that. And what we'll do now is move on to the last slide. But please do post any questions in the chat, and we can pick these up at the end. Right, so before we wrap up, let me quickly explain where we can actually help, and where does our own platform fit in. So most of the firms already have a data warehouse, let's say like Snowflake, but on its own, that isn't going to solve all the data challenges we've just spoken about. You still need to build or acquire the data layer that integrates your systems, and that's exactly the piece many data warehouses are missing. So what we've done is built a platform and proven it in production that can complement your existing data warehouse. What our platform does is it acquires, ingests, and processes the data, validates and standardizes it, and blends it into one single source with full lineage. And if you don't have a data warehouse in place, we can provide one which is integrated into the MSD platform and manage your data end to end, so you get a full data solution. We've also built a dedicated data extraction module, which again, we've proven in production. So that's where we fit in, complement your existing data warehouse to provide the full data solution end to end. Right, thank you all. Let's move on to questions.
Actually, Pray, I have one that's come in here. I can see on my side. And the question is: we've already invested in Snowflake, but still seeing a lot of the same problems you've described. Is this a tech problem or something else? I mean, I have a view on this, but Pray, do you maybe want to address that question first?
Okay, thanks, Mark. Yeah, I mean, it's a good question, and I'd say usually it's not a Snowflake problem. Snowflake is a strong place to store and query data, but it assumes the data's going into it is already clean, connected, and consistent. So out of the box, Snowflake won't extract data out of PDFs and fund manager documents. It won't validate the data or make it consistent, and it won't build you that single golden source. So if that work isn't happening before the data lands in Snowflake, the same issues are going to remain, and they're now just sitting in the warehouse. I think that layer of acquiring, extracting, validating, blending is often the part that's missing. And we're also hearing something similar when we talk to our prospects and clients. And it's the piece we focus on. So what our platform does is it sits alongside, let's say, a data warehouse like Snowflake, feeds it clean, governed data, and lets Snowflake do, I guess, what it's good at.
And I think Priya, I guess we've seen examples and being vendor neutral, where investments have been made in a platform such as this, but the organization is struggling with the issues you raise. They're struggling with extraction. They're struggling with solving for specific use cases. So it kind of talks to, obviously the implementation of this is positive for the organization, but you still need to have the specific use cases defined. You still need to leverage the data specialists. And you still need to be able to deal with exceptions, as you demonstrated earlier. So there's no silver bullet for this. It's a case of which kind of ecosystem components are actually solving the problem for individual clients. I've got another question here, and Ian, I'll just address this to you initially. It says, and we've touched on it, but maybe expand on it. Can smaller companies afford this? And how do you justify the cost and secure buy-in?
So I think the big advantage of the new technologies around AI and data is that this enables smaller companies to afford this. Now, it goes back to what we said before. Clearly, what they can do is work in-house with the right mix of external and internal partners. I think that's that's the first thing. And what they'll be looking for is to leverage the technology, to leverage some of the talent, and manage the risk. And how they do that is to manage it, or our experience is you would manage it through a very carefully staged evolution plan. It's something I think you mentioned earlier, Mark, with steps based on outputs that are achieved over time, which may be individual use cases. And this means that individual step results achievement can enable you to self-fund. So you can get the benefits from the initial use case and use that to fund to proceed to the next stage. So this is available, and for the first time, these sorts of advantages are available, database advantages available to smaller companies in an efficient way. So back to you, Mark or Priya.
Rick, I'll hand any comments on that, and I'll hand it back to you for closing.
Okay, thanks, Mark. Yeah, I think we can end the webinar now. So thank you everyone for listening and joining, and I hope you found it informative.
Thank you.
Thank you very much.